What's up, guys? We're back for another banger video here. I just want to give a quick shout out to Dave for allowing me to come on his channel and hopefully teach you guys something in this video. In this video, we're going to be going over our base breakout strategies. So that's first going to include looking at the two base breakout strategies we trade, how we came up with the strategies, like looking at some of the great traders that are in the market that use these strategies. And then I'm going to show you some examples of previous trades we've taken using these strategies. Now, if you do like this video or you felt like you did learn something, please hit that like, hit that subscribe. We're trying to hit that 1,000 subscribers by the end of the month. And I think with your guys' help, we could do it. So without further ado, let's jump right into it. All right, let's start digging into what this video is going to be about. So me and Dave, little background, we have 3 trading strategies that we like to follow. The first one is base breakouts, which this video will solely focus on our base breakout strategy. The second is trend breakouts, and the third is EPs or episodic pivots. Now, we will have videos on trend breakouts and episodic pivots, so go watch that. But right now, I just want you guys to focus on this base breakouts and getting an understanding on one of the strategies we have, because trading is very confusing. So if you can just focus on one strategy and really master that one thing, then you can start veering off and focusing on the other 2 strategies. All right, now you guys are probably wondering, Adam, where did you learn these strategies from, or how did you do it? Now, I want to tell you something personally that I have found from trading. There's a lot of people out there who are trying to reinvent the wheel, or they're trying to make this magical strategy that prints money in every type of market. Which, to be honest, when I first started, I was like, oh yeah, I want to discover that, because then I don't have to work again in my life and I just trade full time. But that doesn't work. The market doesn't work like that. So what you really want to focus on is studying the people who are successful. That's the root of these strategies. Is me and Dave were studying the people that are successful at trading and have made a career off of their gains from trading. So that includes people like William O'Neill, Mark Minervini, Chris Quilamagi, Oliver Kell, Stan Weinstein. And I will be mentioning a lot of those names in this video because we're not reinventing the wheel here. We are looking at these top guys who have discovered edges in the market, which is what these strategies are. They're edges, and they have turn those edges into a profitable strategy where they can just extrapolate money from the market. Alrighty, so the first thing we got to look at here is market direction. So what I mean by market direction, it's what direction is the market going? Pretty straightforward. But this is kind of where Stan Weinstein comes into play. He's the master of stage analysis and determining what stage the market is in. So the market has 4 stages here. This is taken right out of the Stan Weinstein website. You guys could go look at it. But you have 4 stages: stage 1, stage 2, stage 3, and stage 4. Rinse and repeat over multiple bear and bull cycles in the market's lifetime. Now, the key thing here is understanding what stage the market is in. So if we look at the live example of SPY here, you have a stage 2 right here. Then you have a stage 3, stage 4. Then you had a stage 1 right in here. And then you have your stage 2 continuation here. So we're right now, currently as the video is being formed, we're in a stage 2. The reason why this is so important to understanding where the market is because our strategy, me and Dave's strategy, does not work in a stage 4, a stage 1, a stage 3 market cycle. It only works in a stage 2. And you guys are probably like, well, that means I'm not trading for majority of the time. Yes, that's true. You are not trading for 3 stages of the market. And you could go develop a short strategy or day trade in this strategy. But like I said at the beginning of the video, you just want to focus on one thing and get really good at that. So that is what we found from studying these grades is the strategy, the base breakout strategy, trend breakout strategy, EPs work best in a stage 2, and you will make so much more money than you would trying to trade in this type of market environment. So it is a lot of patience, but there is a big reward towards it. waiting for a stage 2 and something like this. You will make so much more money if you are patient and protect your capital during a stage 4 or even a stage 3 scenario. So now that you guys understand simple basic stage analysis, now there are more in-depth details on determining when the market is coming out of a stage 1 and going into stage 2, and when the market is going into a stage 3 and potentially a stage 4. And I'll probably do another side video on that, but right now I just want to stick to the base breakout strategy. So yeah, and if you do have any questions, please join the Discord below and reach out to me or Dave. We're more than happy to help you guys. Now, when it comes to the base breakout strategy itself, there's only 2 real guys you need to follow, and there's only 3 real books you need. The first guy is William O'Neill, which is your basic how to make money in stocks. That is your go-to, your foundation. And then you have Mark Minervini, who goes more into depth, and you have his books like Trade Like a Stock Market Wizard and Think and Trade Like a Champion. So those are the 3 books you need to master this base breakout strategy, and I'm going to kind of recap their strategy in this video. The first thing we're going to dive into is taking a look and analyzing William O'Neill's cup and handle strategy. Now, if you have any sort of experience in dabbling in the stock market, you've probably heard of the strategy before. It's the most common used base breakout strategy out there because it's so easy and it's very effective, especially when you have a market running in this stage 2 uptrend. I just kind of want to give you a simple lookout of what a perfect cup and handle looks like. So you have your chart here. You have this push up here, so it's showing the stock is in that stage 2. Going back to Stan Weinstein in that stage 2 analysis, you have the stage 2, and then you have this pullback right here, and then it forms this flat area, and then it moves up. So it's kind of like a mini stage analysis in a stock. You have your stage 4, stage 1, stage 2, and then your stage 3, and your continuation here. I don't like to think about it like that. It's just an easier way to visualize it. So you have your cup and handle here, and this is where you want to buy it, right when it clears this handle high right here. Right? It pulls back, marches its way up, and then it breaks out here on volume, and you want to see it climb higher. Now, there are 2 different ways to look at cup and handles on different time frames. So William O'Neill, he uses the weekly to look at cup and handles, but I like to use the daily because it's a little faster. And I'm more of a swing trader, not a long-term investor. If you're more long-term, weekly is definitely the way to go. And if you guys don't know what the difference between the weekly and the daily time frame is, I do have another video explaining you how to set up TradingView to look like this beautiful chart, so you can have the exact same setup like me to trade these base breakouts. So I highly recommend you go check that out. Now let's jump into some examples. So I put together 3 examples from the past, one from a long time ago in 2020, and the other 2 really recent. So the first one we're going to look at is Tesla. So Tesla had a beautiful cup and handle way back before people really even knew what Tesla was. But you could see here, I marked it out here. You can see you had the start of the stage 2, came up, sold off hard, and formed this cup here and built its right side, and then it got super tight along near these all-time highs and then broke out. The other key thing to watch here is volume. So when you have this big cup being formed, volume doesn't really matter that much, but when you see it start to tighten up here, you want to see the volume start to contract like this, get less and less volume. And then when you see it break out of this, the handle, you want to see the volume come in and push through this kind of area of resistance. Now, I do have a video showing you how to set up all these indicators, so I highly recommend you go check that out. The next example is NSSC. So NSSC, NAPCO, had a very recent base breakout. Tesla's was in like 2020. This is now in 2024. So you can see the same thing. You have this push up, stock is in stage 2, and then you have this pullback, and you have this handle being formed here. This cup being formed here. And then you see it gets super tight, and forms this little handle right here. Now this is a shorter handle. I usually like to see it around 2 weeks, kind of the minimum, but this does look still really good. And then you see this volume start to dry up right here, and then look at it, boom, broke out on huge volume and went for a nice little run there. So you'll notice with a lot of these examples, and you can go through charts and charts, and I highly recommend you go through all these charts. Trading is a lot of just rinse and repeat stuff of just looking at the graphs and doing your technical analysis. It's just rinse and repeat over and over again. Now we have mod, MOD. So mod had a beautiful cup and handle base breakout down here. Now it is a shorter cup. The other ones I showed you were longer, but it still worked out really, really nicely because this is right around when the market was in the middle of its uptrend. Same thing, you have this run up, then you have it sell off here, form a nice little cup, and then you have this handle. It came up, pulled back when it touched these all-time highs, which is what I showed you in this example. It comes up and pulls back, touches this moving average, has dried up volume, and then boom, on the breakout, huge push up on that volume, right? So it's just rinse and repeat over and over again. So this is the cup and handle strategy. I like to play it on the daily. William O'Neill likes to play it on the weekly, but it still works. And you can see mod just went on a tear here. Went from that cup and handle base to 80% move over that course of that time. So they are very, very powerful moves. And this is the one strategy we watch out for, the cup and handle strategy. So now I want to show you the other side base breakout strategy, which is Mark Minervini's strategy. Alrighty, now let's jump into Mark Minervini's bread and butter strategy. A little backstory on Mark Minervini. If you guys don't know, he's one of the pioneers, big influencers in the stock marketplace, and just an incredibly successful trader. I think over his career, he's made around 33,000% on his account. So you can just imagine 33,000%. Now, his go-to strategy is the volatility contraction pattern. In other terms, he likes to call it VCP. So what does kind of the VCP consist of? I have this really good chart here. You could just search up VCP, you can find it online. There's so many different examples of what to look for, but I'll kind of walk you through what this means. So you have a stock, needs to be in a stage 2 uptrend, market needs to be in a stage 2 uptrend, and then you have this sell-off, and then you have this buyback to this high, and then you have the sell-off again, and then it contracts, it gets smaller. So you have a bigger sell-off, a smaller sell-off, an even smaller sell-off, and then a breakout. And the other thing you gotta watch out for is the volume here. As you can see, on an example like Wish, you have this volume dry up, and look how little the volume is before you get this breakout on volume here. And that's exactly what you want to look for when the stock is consolidating in this VCP pattern. Alrighty, now you kind of know who Mark Minervini is and the backing behind this base breakout strategy. I'm going to show you 3 recent examples of trades I've taken using this VCP strategy. So let's first look at DAKT. So DAKT, it's going to go from oldest to youngest. DAKT is a while back. It was in 2023, near the start of the market bull run. Now, first things you got to look at here is you have a stage 2 being formed. So you have the stock is in a stage 2 uptrend. That's the first thing we got to look for. And then you have it form a base in a stage 2 uptrend. So now what we look for is just like the picture. You have a contraction forming like this, 17%. You have another contraction like this, which is 9%. And then you have one contraction before the breakout, which is 4%. So you have 3 total contractions here. And you're probably asking, does it matter how many contractions? I usually like to see 3. The more contractions, usually the stronger breakout and the longer the run. But I usually just like to see 3. So you can also do 2, but I like to see 3. So then you see this here, it gets really, really tight along this 10-day moving average. and then boom, you have this beautiful breakout day on volume. And as you can see here, when it gets super tight, you have this volume dry up, very little shares being traded, and then boom, right here on the breakout day, you have the volume being traded, and it went for a nice little 25% run, right? It's just the same thing over and over again. Like, I'll show you these other two examples. You'll start to realize, like, it's rinse and repeat. It's waiting for these setups to come. So RDNT is a little fresher. Let me just scroll to it. So RDNT, same sort of thing. You got the stage 2 setup right here, stocks moving up, and then you have a base being formed in its stage 2, and you see this one's very nice and clean. You have this VCP here, 14%, 7%, and then 3%. And then right when it breaks out, boom, breaks out of this area resistance right here and just runs, right? And same thing for the volume. Let's look at the volume. Oh, it gets really tight here. Volume contraction, breakout. Boom. See you later. Off to the races. And this one made a nice 28% move too on RDNT. So it's just rinse and repeat over and over again of the VCP strategy. The next one we'll look at is SHIP. So SHIP is another beautiful looking name here. Beautiful. You got super tight here. But let's start with the basics again. You have this beautiful run up here. So stock's in its stage 2. There's buying behind it. Institutions are buying the stock up. And then you have a tradable base being formed in the stage 2. So you have your first VCP here, which is 14%. Then you have your second one, 6%, and then you have your last one, 3%. So it's cutting it's in half by each time. And then right when it breaks out, look at that. That was a perfect break right here. Just boom, volume came in. You had the volume dry up, and then you had the big push up. Now, when it comes to volume, and I find with VCP, volume is super important when you're taking a trade like this, because you want to see that volume dry up before. I usually like to give it 3 days of having consistently below this moving average worth of volume. So having 3 days. And if you do, like I said, I do have a video showing you how to set this up. So please take a look at that. But yeah, that's how I gauge if the stock's ready to go or not. And this thing went for a nice 40% run. All of it with trading these space breakout strategies, most of it's patience. And for starting out, sorry, let me rephrase. To starting out, it's training your eye, going through 500 charts a week, 1,000 charts a week, and realizing what works for you. And then once you figure out what works for you, it's all about honing in and mastering that one setup. And for me, I like the VCP pattern more than I like the cup and handle, and that's what I've honed into. That is basics of base breakout and of the cup and handle and the VCP pattern. So now you guys are probably also wondering, Adam, like, how do you manage a trade? What do you do when you put on a trade? How do you manage your risk management? Now, I'm going to split that off into a different video, because risk management and managing a trade and once you're in a trade is way different from looking at the setup. This video is just focusing on determining a setup and what to look for, right? So a few things off the bat. First thing, stock has to be in stage 2 uptrend, which is has an RS rating of 90 and above. If you don't know what RS means, it's the relative strength of the stock. If you join the Discord, I give away the top 500 RS stocks in the market right now. It's just a general scan of the stocks, so you can already look at are in that stage 2 uptrend, and you don't have to worry about looking at these garbage stocks and feel stressed about if you're picking the right stocks or not. So join the Discord. I posted that in there every week. I feel like you need, first place to start is make sure you're looking at the right stocks. Now, the RS rating, I do explain it in the other video, so take a look at that. And yeah, I'll do another video on risk management, because it's super important for you guys to understand. Well, guys, that does it for this video. I hope you learned a lot. Like I said, please subscribe, join the Discord if you have any questions on this. Me and Dave want to help you. We want to grow a trading community that all has the same similar purpose, and that's to make money and succeed in the stock market. Just some little advice at the end here, like trading, it's no easy walk in the park. It will take you it's going to take you at least a couple of years to get really good at this and start actually seeing some returns from your trading. All I can say is keep grinding at it, and please reach out to us if you have any questions, because a lot of this can just get confusing, and I've been there. So and I really wish I had somebody like myself to tell me what to do, but just please reach out. And yeah, thanks guys, and cheers.